This is On Tilt Trading with today's live crypto market analysis and trade strategy. This is the New York AM session. Today is July 23rd, 2025. I am currently long in a Bitcoin position. I took a position earlier in Bitcoin that failed, and now I'm in a second position, and I'll walk you through what I'm seeing here this morning. So this morning, let's do a top down here, starting here on the 15-minute chart here. Down here on the 15-minute chart. So this morning, opening up my trade session, noticed that Bitcoin was in a downtrend. So this morning when I start trading, it's usually right here at 5, which will be like the equivalent of 7 o'clock New York time. So we can see in this time period, this would have been the structural weak or structural strong high here. And this was the structural weak low here coming in, and we can see price action pulling back at this time for a potential reversal or a market structure shift here with a close above this candle here. So if we get a closer look here on the 5-minute chart, come in and we'll see here we get the sell side delivery. We get 3 candles or more. Here there are 4. Then buy side delivery, looking for 2 candles or more. Here you get 3. Identifying the fair value gap, which is right here, which is where you see this light blue box, and then a market structure shift where this level is here. So these are the 3 things that I want to see. I want to see the fair value gap pattern or fair value gap formation with the fair value gap, and then a market structure shift. So these are the 3 things that I want to see to take a position. Price action was delivered to the buy side, barely traded into this fair value gap, tested this area here, this high, this swing high, sold off, traded back into the fair value gap. Here I took an entry. Price was delivered to the buy side, consolidating here just above this other fair value gap that formed here, and then sell side delivery here. Then I took an exit here as my stop was violated, and we can see some consolidation, another sell side delivery here, and then this sell side delivery trades into a fair value gap that's down here. So you can see the level here coincides with the lower end of this fair value gap that was traded into. So now the fair value gap that I was trading for earlier with this first trade here was this fair value gap here was my target. Now I am targeting this area here just below it. So there's going to be buy side liquidity resting right above these 2 candles here, which is also pretty much equal highs with this area here. So there's going to be buy side liquidity resting right in this area that I want to target. I usually trade fair value gap to fair value gap. So there's a possibility that I could change my target back up here to the initial, but I doubt it simply because I just want to keep things as clean as possible, and the fair value gaps, or at least the major ones, are a little bit above, or at least there are a few fair value gaps further above where my target is, but I'll walk you through what I have for this current entry. So we get the price delivery here, so we get the formation. This formation is not as clean, but just from an observation that I made watching the ICT 2022 mentorship, is that some of these fair value gap patterns will form an inside candle, and I don't count that fair value or that inside candle the same. This is not an ICT concept, or at least one that I've come across. So this is just something that I've been observing. But with the fair value gap formation, you want to see at least three candles for this bullish fair value gap formation. Three candles to the sell side, you get four, and then you want at least two to the buy side. Here you get the first one, and then this is the inside candle that I'm talking about here. So I've seen this on the ICT 2022 mentorship examples, where you get this inside candle in between the candles that actually giving you the formation. So with this, getting the three candles here to the sell side and an additional candle here, looking at this candle, and this candle as my two candles. With this inside candle, I'm not really counting it as one of the candles in the formation, and just calling it these two candles here. And I still have to evaluate how I want to process these candles. I still want to treat them as if they're inside, so I don't count them as a buy side or a sell side delivery. They're just inside. But what I did with this was just counted these two candles. This was the swing high. So when this candle comes in, it creates a market structure shift here. So here, getting the formation here, and then the shift, the fair value gap is what was missing from this situation. So I wasn't getting a clean fair value gap in here, but what I did was treated this candle like an order block, and took an entry here when price came back into that candle. And then I could have put a stop down here, but I put my stop here. And now what's forming here is a fair value gap has formed right here. So I'd anticipate price may trade down into this area here, since no fair value gap has been made here. And even though I don't really want to, what is this? 117,789. Actually, this isn't going to do that, so let's do this. 117,499, 499.4, and then let's look at this take profit up here. 119,241.6. 241.6. Nope, that's the wrong one. Okay. Putting things in the wrong place here. Stop. 117,499.4. 499.4. Okay. Limit. Low 117,789. 780.9. Stomach this. Still didn't trade into the gap here. Considering adding to the position here, now that a proper fair value gap has formed off of this pattern here. So not the cleanest setup here, but potentially a setup nonetheless. So I'm gonna set up for an entry here. Let's get some numbers. $37.20, 717. Okay, this would make it a 5-to-1. Let's see if we can get an add here. Since that first position was likely a bit premature, but I didn't want it to move past me here. Now we got another entry. So this being the gap here. I'm getting some buy side delivery here following this entry. Okay. Now I'm going to target the fair value gap. And this other position, I'm going to change my stop or my take profit back to that level, that 119.241.6. I wasn't confident on the profit taking because I didn't have the fair value gap. As I mentioned, I like to trade from fair value gap to fair value gap. Since I wasn't trading off of the fair value gap, I didn't feel comfortable targeting the fair value gap. But now that I'm trading off of fair value gap, I feel more comfortable targeting the fair value gap. What is this? What was it before? This was a 3. Okay. The numbers are going to change because I'm not in the same place here. Control paste here. So the position is going to modify, so I'm going to have to go back and modify that position in my trade log where I journal my notes. Just keep my pertinent information for what I'm tracking at that time. So wound up being a 5-to-1. On the new one, that was a 3.5, but it's probably different now. Okay. Okay. Let's see, what time was the ad? Still getting some buy side delivery here. Price consolidating near 117.900 right now. It's got the entry at 834. Okay. To do the now I need to figure out my risk to reward on my first position here. Take profit there, stop loss is down here, 117.2595. Okay, and I got an entry at 117.6494. Okay, So that would give me risk to reward of 33.66 divided by 16.77. Saying it's 2-1, but it was a better risk to it. Something's off because it was a better risk. This limit price is wrong. 17.6494. That can't be right. Okay, now we're looking at closer to a 4-1. 40.51 divided by 992. Yeah, right at a 4-1. So a 4-1 and a 5-1 here. So let's adjust that. Okay. So risk management wise, looking at a 9-2 risk to reward ratio all around, or a 4.5 to 1. If you reduce it to a single trade, which I'm calling this a single trade, or I view this as a single trade, just because I add it to the same position and I have the same take profit, and then made that adjustment to my original take profit here. So the way that price action has been going along here, I would imagine this trade would take some time to unfold. If it does unfold, I've been getting lots of failed trades here lately, or at least this week. This weekend, price action was kinder to me. This week here, price action has been a bit less than desirable, but when just trading on just the numbers, and just right now I'm trying to get numbers as far as in just like an actual trade count. Like I want to see what's my win-loss percentage using this system, and then analyze the profitability, if at all, for what I'm doing. So I'm simplifying some of the things that ICT is teaching in the mentorship by using this 15-minute chart. But in my mind, how I see this system functioning is trading reversals. Essentially, I'm a reversal trader using this methodology. So using the 15-minute chart as my bias, and using the structure on that chart to give me the bias that I want, and not necessarily having a daily bias, but allowing the intraday price action on the 15-minute to dictate whether or not I'm bullish or bearish, and this can change over the course of the day, or over the course of, or in between sessions, or in the middle of sessions. But basically, since I'm looking at trading reversals with these market structure shifts, trading reversals here on the 5-minute to lead the 15-minute. So basically, entering when the 5-minute sets up with the idea that the 15-minute will follow. It is just lagging, but so far it's proven, or I'm not sure what the actual numbers would be if I was using some of the bias methodologies that ICT talks about in his mentorship. But for me, with being a day trader and trading intraday, the 15-minute is what I use to get a feel for structure. So trading opposite of the structure on the 15-minute would give me the intraday reversal, or for me would be an intraday reversal strategy. from just trading against the 15-minute. So that is essentially what I'm doing here. And even with this trade here, you can see earlier this morning there's a strong high placed back here, this being the week low, with this being in a downtrend here. This is the current strong high. If this candle here closes below the previous 15-minute candle, then this would be the new strong high potentially here, and then it would bring the potential for a market structure shift on the 15-minute much closer into view here. If this candle does this, also this candle could just potentially buy here above, but with less than 1 minute remaining in the candle, it looks like it's going to form a swing high, and we have a swing high here on the 15-minute. So now we'll move this down, and you can see here these equal highs here on the 15-minute here. So to me, this double top type pattern here, to me this is a target for liquidity here. There's going to be buy side liquidity resting up here, and my trade idea is based off of institution or market maker targeting this buy side liquidity up here. Also you can observe that this liquidity is just below the equilibrium point right here, this blue line right here. This area below this blue line here is an area of discount. Here this is an area of premium. So when buying, I want to buy in a discount and then sell into a premium, or if I'm selling, I want to sell here from a premium and cover here down here in a discount. And this range, this dealing range that I have right here is based off of this high here that was put in, and then you can see price action has been delivered. This high was put in here, then you can see the swing that fails to be delivered back into the high here, and then just overall just getting sell side delivery, some pullback here, further sell side delivery. Currently price trading at 117.920 level, getting some buy side delivery here, but this is what I have for the dealing range right here. So when I choose a target, I want to choose a target on the other side of the equilibrium, preferably trading from fair value gap to rebalancing a fair value gap on the other side of the equilibrium. So that's what my trade is based off of here in this AM session here in New York. But price action has been a bit sticky here. So no, let's say, price delivery with speed very much in my direction. And these positions could easily just fail. Actually, I'm going to move my first stop here up to this down close candle here, or this sell delivery candle. I want to treat this as ICT was mentioning as treating your opposing candles. For example, I'm long, treating all of your sell candles as order blocks. So actually right now I'm going to move my stop up from down here on my first trade up to here, to this candle here. So the low here, 117.499.6, 117.499.4. And now you'll see that my stop has been moved right back to here. So let's confirm that. So now I'm going to use these down close candles as a stop, so this will protect my account should this position fail. ideally, this candle here would hold, but based on the formation here, I don't know if this candle is really set up to be an order block here. It would be great if it were, and then price were not trading back down into this, or it would be great if I didn't face any drawdown with my entry here, but that may or may not be the case. But I do want to use this sell side delivered candle here as my stop loss. If things trade back lower than this, I will not be interested in trading further. Now we can see a sweep of that entry candle. Price reacted from that level, trading down into this. So you can see price traded into this fair value gap. It may have rebalanced this fair value gap. Let's take a look. So the original candle here comes down to a low of 755.1, with the high of this fair value gap being 745.6. So the fair value gap was not closed here on this candle, but this candle here, the low is 749.6. So still didn't quite close the fair value gap, but came very close to closing it there. So to me, that would be valid price action. Now I would want to see this candle here break out at least above the previous 5-minute candle after reacting from trading inside the fair value gap here. If this candle could also come down and close the fair value gap, I would be comfortable with that, and then that would leave this candle here that I placed my stop under as the order block that I wouldn't want to see price action trade below. So ideally, just getting some buy-side delivery here with speed would be most ideal, but there is about $1 or so that price could trade back into here for the order block. But I would like to see price delivered higher here, preferably with speed, at least trading above this previous 5-minute candle, but even better if it were able to break out above this swing high here. And now we're getting buy-side delivery with speed, price trading at the 117.950 level, and has put in a new 5-minute high. So the previous 5-minute high, 117.943.1, and current high here, 117.945.2. So new 5-minute high. So I wouldn't expect the price to trade back lower. And now I would look for price to trade above this swing high here. Another thing I've observed in ICT recently is with the looking for the market structure shift to be closed above. I've seen that he's taken some positions when price action just trades above that level, similar to some of his other lessons where if you see the order block, waiting until the order block candle closes above or below an order block, but also knowing that in those situations, if price trades through the order block, whether long is above or short is below, then he would consider those order blocks validated. So I'm wondering if the same concept applies for this ICT 2022 methodology, even though he doesn't go into exceeding details into order blocks. They're still a part of the process, even though he's simplified the language, but just recognizing whether or not if there's a breakout from an order block, whether or not that could potentially validate an entry or not. But I'll keep an eye on things as I go forward and progress incorporating or deploying this particular trading system. But whatever's happening here today is certainly not happening in a hurry. So I'll let this price action play out, and if all goes well, I'll be able to take some profits here at some point in the day today. But this is what I'm seeing so far today in the crypto market, and overall sell-off here, and now looking for or sell-off from overnight into the AM session, and now looking for a potential reversal, at least back to the equilibrium of the entire price leg here today. But this is On Tilt Trading with today's live crypto market analysis, and trade. Actually, hold on. Before I'm done, I didn't think we took a peek at the tickets just because I was getting the time here. But I took one position here that I went over here at the beginning of the session, beginning of the live session. Took it at 5:14. Exit at 6:56. Took a small loss here, about a 70-cent loss here. And then you can see the position that I'm in now. First position here at 8:07, and an ad here at 8:34. And yeah, we'll just wait and see if I'm able to take profits here. But pretty slow morning, but more eventful than yesterday when no pattern at all set up. So a bit eager to trade here or trade again with this earlier type position here, and then taking the fair value gap position here. But this is On Tilt Trading with today's live crypto market analysis and trade strategy. We'll see you next time.